And it's time now for today's business news. And one man who is working this May Day is Jameel Ahmad, Chief Analyst of GTC Group. Good morning, Jameel. Can you tell us, how are the markets reacting this morning?
This morning there's some calm, but I can't say it's been calm for the past 24 hours, Oliver, because we've had another day of twists and turns in financial markets. We've gone from looking like a very negative day based on confirmation of the US economy contracting for the first quarter of 2025 to actually financial markets ending the day somewhat higher and seeming to be continuing that session into the United States, which is not closing or fully closed for the May Day public holiday that many markets across Asia as well as Europe are closed for today. We also have to take into account that it might have been because it was the last trading day of April that traders were taking some profits or positions or closing positions, and that's why we had some increased volatility. But yes, the major headline was the US GDP contracting for the first quarter of the year, as well as more signals that maybe the Trump administration are going to continue to roll back on some of the aggressive narrative on trade policies.
And how has the reaction been to those surprise US GDP figures that saw the American economy contract in the first quarter of the year?
On this one, we need to take a glass half full approach. And the reason being is there were expectations that the US economy would contract over the first quarter of 2025. But of course, when we've had such chaotic policy decisions and erratic financial market volatility, of course, it does not look positive that the first quarter since the returning president came back into the White House, that the economy contracted. Already, we're starting to see the probabilities again of a US recession increase. Some better markets now have it close to 60%. Expectations are also increasing that the Federal Reserve, the US central bank, will need to start looking towards cutting US interest rates later this year. Of course, this would beat to the drum of the US president, who only weeks ago caused another spin on financial markets where he seemed to have threatened the position of the Fed chair for not doing what he thinks that they should be doing. But we also need to look into whether these tariffs are going to be fully implemented, what's going to happen over the coming quarters. One, contraction is not that much of a big deal, but of course the headline is there because of all of the unpredictable policy decisions over the past couple of months. At the same time, the US economy was doing so well over the past couple of years. People are going to ask questions, what exactly is the reason for this surprising turn? And the Trump administration have said overnight that they do need some time.
And what other key data are we expecting as the trading week wraps up?
All eyes are still going to be on the United States economy because we're going to get the monthly jobs report tomorrow, where the expectations is that somewhere around 130,000 jobs were added to the US economy in April. Maybe the pressure is going to be somewhat higher heading into this release following that GDP report yesterday and all the concerns about trade tariffs and so forth. So even though it is a public holiday in many markets, I would still keep my eyes on what's happening tomorrow in the United States, because if we do have a surprising number with the non-farm payrolls, that is the monthly jobs report, then we might hear talking about a lot of volatility over the end of the week and a lot to talk about when we speak again on Monday morning.
Thank you very much for that, Jameel Ahmad, Chief Analyst at GTC Group. Now you're watching